Hello, myself C. Abhishek Goyal. I am here to teach you accounting in a very simple manner. So let's today start with a very simple chapter, Basics of Accounting. This chapter will be useful for BCom students, MCom students, CA Foundation students or 11th standard, 12th standard, MBA finance students, everyone who is learning finance. So the basics of accounting is majorly include the accounting definition, or you can say the flow of accounting, types of debit and credit, golden rules of accounting, etc. So many things. So today I will try to cover each and every topic in a detail. Let's start. So today I'll start with the definition. What is accounting? So accounting होता क्या है? तो basically देखिए, मान के चलिए कि भाई any financial transaction you enter, it has to be recorded into the books, classifying correctly, and that has to be summarized in a proper report, which is called accounting. अभी क्या होता है कि बहुत सारे definitions हैं book में and etc. You can learn it from that, but the intent, the clarification is the summarization of this particular definition is like this. So you can say it is an art of recording, classifying, and summarizing the financial data. Now financial data क्या होता है कि भाई कोई भी इनवॉइस है या फिर सेल्स हुआ है, परचेज हुआ है, सैलरी पे किया है, all sort of transactions are financial data that has to be recorded, classified and summarized in a particular format. It is called an accounting. So it is a very simple definition if you learn. Now what sort of financial data summarized? So basically you can say summarization is mainly for the balance sheet, P&L or trial balance. What is classifying? Classifying means it is an expense or an asset or an liability or an income. That is a classification. What is recording? Recording means passing of a journal entry. That particular journal entry has to be posted on the ledger. So the flow of accounting will be maintained. In next thing, we will learn the flow of accounting. So what is the flow of accounting? So now, first, as I said, it is a recording of transaction. Now, before this, if you see recording of transaction, but what is transaction? So transaction means simply any kind of financial settlement is a transaction. Let's say I have paid you 100 rupees, then it is a transaction. You have paid a salary to your employee, that is a transaction. So anything, any financial data involves money is a transaction. If does not involve money, that is there is no monetary transaction, then it is not recorded into the books of accounts. Let's say example, issue of purchase order. Now purchase order issue is not a financial transaction, hence because that particular transaction does not involve the money. So there are financial transactions, there are non-financial transactions. Appointment of the CEO, appointment of the CFO, these are non-financial transactions but have the impact on the financial systems of the company. Hence, these kind of transactions are not recorded into the books which are having no monetary transaction. Now, we'll understand the flow. Now, first you have to understand that recording of transaction. After that, you have to pass the journal entry. What is journal entry? We'll understand in a detail. After passing of the journal entry, you have to post that journal entry into the books of accounts, that is called ledgers. Now, when you post this entry into the ledgers, you will get a debit or credit balances. Now, this credit and debit balances, where it will go? It will go into the trial balance. Now, trial balance what? What is trial balance? Trial balance is nothing but a summarization of ledger accounts, whether it is a debit or it is a credit. It shows the debit and credit. Now, how do you check whether trial balance is correct or not? You have to simply check debit and credit total will always be equal. Now, if debit has 100, credit has to be 100. Then only the trial balance is okay. It is not correct. I'm not saying it is correct, but it is okay to go. Okay. When you prepare the trial balance, after the trial balance, you will have to prepare the financial statement. Now, what sort of financial statement companies prepare? So there are basically three types of financial statements. What are those? It is a balance sheet, second is a profit and loss statement, third is a cash flow statement. Once you prepare all these three statements, the entire chain of transaction will be completed. Company has to present balance sheet, P&L and cash flow statement to the shareholders or to the stakeholders of the companies. So these three financial statements has to be prepared, and for this preparation you really need that accounting flow to go in a one. So okay, now we'll move ahead. Okay, so like we have understood the types of financial statement. It is a balance sheet. So balance sheet, okay, so let's understand what is balance sheet. It is a combination of liabilities and assets. Now we'll understand what is liabilities, what is asset. I'm just giving you the brief idea right now. Now we'll go on a profit and loss. What is profit and loss? It is a statement which indicates a profit or a loss. A very simple definition. What it contains? It contains incomes and expenses. Now what is cash flow then? Cash flow is basically what sort of cash company has in operations, in investing activity and in the financing activity. So let's say company has a profit of 1 lakh rupees, but it does not necessarily mean that company is making profits. It is not a cash profit. It is just on paper profit. Cash profit might differ. So that particular cash profit you can check from the cash flow. So these are the kind of financial statement company has to prepare. Now what we will learn in the next slide. Okay,